Nate, so how do kids reduce your borrowing power?
Well, today we're going to go through all the things you need to know about how a dependent child can reduce your borrowing power.
And one bonus tip we've included for you to understand how you can actually improve your borrowing power without getting rid of your kids. All right, let's dive right in.
All right, to get us started, and to be clear, the banks have no problems with kids. They just need to include it in their assessment to ensure that they're lending responsibly. So in this video today, we're going to go through all the things you need to know if you have dependent children and how that might impact your borrowing power, as well as ways that you might be able to improve your borrowing capacity with dependent children.
And before we get started, I want to say a quick shout out and a thank you to the vintage loving vegan for his question or her question on this video, on this very topic. You wanted to know how kids impact your borrowing power and how to get around it. If you guys have got questions, make sure you hit us up below and let us know in the comments. All right, Nate, so let's unpack that a bit further. So if I've got lots of kids, it might feel like the banks kind of don't like you, but is that the case? Or what's the reason behind them lending you less if you've potentially got more kids?
That's right, Jayden. The banks have a standard living expenditure in which they expect a family to have. So if you've got 2 adults and 2 kids on an application, they're going to expect your living expenses to be anywhere from, call it $3,500 and upwards. Now we will look at your exact living expenses and what you're paying per month. So if you're spending $5,000, the higher of the two is always adapted in your assessment. So when you've got 2 dependent children, the banks are expecting your living expenses to be higher than if you've just got 2 adults and no dependent children.
Yeah, and that's because you've got things like school fees, you might have school uniforms, holidays. It costs a heap to feed kids. Our mum had 4, like it wasn't cheap. But the reality is the banks will take that into consideration. And the way that they work out your borrowing power is pretty much the difference between your expenses and your income. And the leftover money determines how much the banks are going to lend you.
So you might be thinking, how can I increase my borrowing power if I've got dependent children and my borrowing power is already pretty low as it is? Well, the first thing to do is look into if you're eligible for things like family tax A or B. These are things that the banks will include in your assessment and will increase your borrowing power. So if you haven't yet checked it out, jump on the government website, check out if you're eligible for either family tax A or family tax B, which is a government subsidy in which you'll get a fortnightly income which can be used in an assessment. So Jayden, when do my dependent children stop counting as being dependent in on my finance application?
Well, yeah, the rule of thumb is generally when they're 18 years or older, or they move out of home. So it's between one of those two. All right, so Natos, but what are some practical things you can do if I've got 5 kids, I'm running the Brady Bunch and I want to get a home loan? What can I do?
So as we mentioned before, family tax benefits is the first thing you want to look at, and then looking at other things that can affect your borrowing capacity, such as credit cards. So for every $1,000 in credit card limit you've got, it's going to reduce your borrowing power by $5,000. So that $10,000 credit card limit you've got is actually reducing your borrowing power by $50,000. There are other things you can look at, which is comparing lenders from lenders. Between one lender and another lender, there might be $50,000 to $100,000 difference in the amount that they're willing to lend you. So looking at all the little 1%ers and adding them up will mean the difference between being able to lend exactly what you think you can lend or being able to lend exactly what you need to lend to be able to make it work.
Yeah, my 2 tips are definitely check out other lenders, because some lenders might accept your overtime, might accept your bonus income, might accept casual income, when other lenders won't, and that will completely strip that income off the table. My second tip is choose the right type of home loan. So interestingly, for us anyway, different home loans like lines of credit or even fixed rates or introductory rates can have a higher reference rate, which means the banks will lend you less against that product than something that has a life of loan discount. So it's one little trick that you need to look out there and make sure your mortgage broker is aware of these things. Bonus question, which is again about having kids. But what happens if I'm separated? What if I've only got the kids half the time? Are they still considered dependent? How's that looked at by the banks when they're determining my borrowing capacity?
Well, it all depends on the lender and the amount of deposit you're putting down. If you're a lender's mortgage insurance or not, it does change the outcome of the question here, Jayden. The main thing is that the banks are going to look at, number one, how many dependent children you have and what's the custody. If it's 50-50 and you've got 2 children and you're only seeing them half the time, well, some lenders will allow you to include 1 dependent on your statement of position. However, there would need to be adequate commentary around that so that the lender can get comfortable around that. So remembering it is case by case. In some instances where you have minimal deposit, the banks will err on the side of caution and go conservative and include 2 dependent children. So on the other side, if you are paying things like child support and you're only getting 10% custody or less, or really minimal time with the children, the banks will generally only include the child support and ignore the fact that you've got a dependent, because you're only really seeing them 10% of the time. So they don't really look at that as an ongoing concern because you're already paying child support.
So that's it for today, guys. I hope you enjoyed that video. If you've got a question like the vintage loving vegan, that's a super hard name to say, by the way, leave it below, leave a comment, we'd love to answer it. And if you've got any questions, make sure you hit us up at huntergalloway.com.au. There's a story of lovely Nathan.